and we'll see. We'll see if
That'll be
people jump in at 7 o'clock. So.
And I actually just made the presentation a PDF. Sometimes it's just easier to make it a PDF that way.
It is, especially on Zoom. Because Zoom shows the wrong thing. Like I got a system, but it's complicated.
Mm-hmm.
Yeah.
Zoom can show the wrong thing sometimes, and sometimes it's just always life can happen. So yeah. Sometimes it's just like, you know what? Let me just make sure that no matter what, I'm good to go.
Good to go. Yeah, Zoom does much.
So I like making sure that no matter what, we're gonna be good.
Hello, thank you all for joining us. Those of you who are here, we're gonna wait until about 7:05 before we get started. Give people time to find the link, get registered in, and then we'll get started. Once again, thank all of you for coming. You're in for a treat. Just give us a few moments and then we'll get started, get ready to go here pretty soon, about 5 minutes. Thank you. If you want, you can put in the chat, where do we have people joining us from?
Yes, where are you coming in from?
So Alicia did make it. We got Megan Watson. So I remember both of them from graduate school.
Yes. Hello, everybody. Thank you so much for coming this evening. Just giving people a couple of moments to join in. All right, Alicia's coming in from Dallas. Fabulous. Super excited to have everybody here this evening.
Megan, you in Seattle? I didn't know that. So I have family in Seattle now. My wife's grandfather and cousin live out there. So yeah. And I got a homeboy that went to UT who's out there.
5.5 years. It has been a long time.
Wow.
Time flies indeed. Hi, James. Hi, Sharon. Thanks for joining us this evening.
Yes, thank you both for joining us.
Super excited here. And of course, as we're just getting started here, if you have any questions about real estate investing, anything that I'm going to be speaking of this evening, feel free to put it in the chat, and I'll try my best to monitor the chat during the conversation. But if not, obviously, I'll answer any of those after the fact as well. So yes. And you can also tell us why you decided to join in tonight. It's going to be a good time. We got some good combos going for you. And I'm just looking forward to a really good conversation. It's going to be awesome.
Indeed, thank you for joining us. I hope I said your name correctly because names are important. Forgive me if I didn't.
Hello, everyone.
And so just give us 1 or 2 more minutes where we give people time to find a link so they can join, and then we'll get started in today's conversation. Thank you all for being here. If you want to type something about yourself in the chat, where you're from, what brought you here today. Hey, that's right. Appreciate it. I got the name right.
Fabulous. Good evening and welcome.
So Richelle is joining us from Columbus, Ohio, where it is 8 o'clock and 10 degrees.
Hint, I'm wearing a sweater.
All right, let's go ahead and get started. I'm going to share my screen, just give you all an overview of Entrepreneurial Appetite and what we do. So bear with me for 1 second. All right, so Entrepreneurial Appetite is a series of events dedicated to building community, promoting intellectualism, and supporting Black businesses. For the past 2-3 years, I've been hosting these events out of San Antonio, Texas. Our first event took place in February of 2018, I believe. So maybe it's been longer than 3 years. Oh my goodness, I've been in the game for a while. 2018, yeah, it was February 2018. There's a burger joint here by the name of Mark's Outing, and he had put on his social media that they needed help to support his business. And so my friend Jason Bailey and I organized an event for young Black professionals to meet with one of the local state representatives. And that was the first of many events. And we've since transformed into an online book club / discussions with Black entrepreneurs and authors. And as we've evolved, we've also been more inclined to be, I guess, a form of social entrepreneurship. So last year, I was fortunate enough with 2 friends of mine who graduated from North Carolina A&T, my alma mater as well, to start an endowment called the From A&T to PhD Endowed Scholarship for students studying education in the graduate school at A&T. And so a portion of the ticket sales that we have here today goes to support that effort. And so when we think about supporting Black businesses, I think about that broadly. And so it's not just entrepreneurs who have their LLCs, their for-profits or whatever. It's Black institutions and organizations that support Black communities wherever they may be and however they contribute to our communities. So I'm going to stop my screen share. And I also want to take this time to introduce a friend of mine from graduate school, Richelle Delia. In addition to being an Aggie, not a Texas A&M Aggie, a North Carolina A&T Aggie, I am also a Longhorn. And I met Richelle my first year in graduate school at UT Austin, and she has a great story about her transition from being a scholar scientist to a real estate entrepreneur. And she'll probably share some of that with us here today. This is her second time on the show. If you want to hear her previous conversation, I believe it happened maybe around this time last year,
late 2020.
Late 2020. And she's talking about, that was her first conversation on real estate, talking about a book called Life, Liberty, and Property that her and her husband wrote a few years ago. So I thank you, Richelle, for joining us. And just tell us a little bit about how you got into real estate and the economic rights movement, and then I'm gonna let you go from there.
Wonderful. Thank you so much, Langston. Again, it is always a pleasure to be here on your platform. I love Entrepreneurial Appetite and you all's mission, and really excited to hear about the scholarship and endowment that you've gone forward to create. That I think that is a wonderful gesture and just speaks to the testament of where your heart is in the mission of what it is you're doing here. So I think that is excellent, and certainly directly in alignment with the things that we do at Housing Joint Venture and now with the economic rights movement. So as Langston mentioned, I am a scientist turned real estate professional, entrepreneur, business owner, all the things. So to be very, very brief, I am a nerdy scientist. I got my PhD in chemical engineering, studying nerve regeneration at UT Austin. But I can tell you that I studied engineering. While I do love it and I do love being a scientist, my ultimate motivation was I wanted something that I could have as my profession that would give me flexibility, but also additional income so that I could start investing and really propel myself forward as quickly as possible. And so, I came from 2 parents, so like everybody else, of course, but my dad was an engineer and my mother was an entrepreneur. And so I'm kind of a myriad of the 2, because my dad was always saying, it doesn't matter how smart you are. It doesn't matter, how intellectually capable you are. It only matters how good you are and what you've done for me lately. And so you have to take care of your own 2 cheeks when you're behind, because nobody else will. And no one cares more about your money and your financial growth more so than you. And so I thought that was very, very good advice. And so he's like, study as hard as you can, get as much, education as you can, but never rely on your employer to be your sole source of your livelihood, because ultimately that's outsourcing your ownership and outsourcing your responsibility. And that, that's not something that a competent adult should do. Instead, that is your own individual responsibility. And so that really encouraged me to start investing in real estate very early. So our first year of graduate school is when I bought my first little house to live in as a graduate student, keep as a rental, and then many properties later, ended up meeting my husband, who is now the founder and CEO of Housing Joint Venture, which is a real estate development and education firm. And our whole mission is belonging and pride for all people. And I'm going to talk a little bit more about that later on in this conversation. But really, we think that housing is a fundamental human right and one of those first rungs when it comes to economic mobility for individuals. And so with that, again, if you have any questions as we're chatting this evening, go ahead and put them in the chat. I will try my best to monitor the conversation as we go. But of course, I may have a little bit of issues with that as I will be sharing my screen. But really excited to chat with you all tonight. And I think this is going to be a great conversation. And again, I'll be chatting for about 35 minutes or so. So there should be plenty of time for Q&A at the end. So with that, I'll go ahead and share my screen here. And so hopefully you can see that. And let me just make this full screen mode. Okay, awesome. And I do, if you see me looking down, I did take a couple of notes because I just wanted to make sure I hit some of these very important highlights. But, I just really wanted to start out, the economic rights movement is really an idea and a momentum and a larger vision for how individuals can participate in economic mobility. If you've been paying attention to the news in the past year or so, you'll know that there's always been a conversation about the wealth gap and this divide between the rich and the poor, the top 1% and everyone else. And I honestly believe that if we don't take action sooner rather than later, then that gap between, let's call it the rich and the poor, the haves and the have-nots, it's just going to get so wide that we really won't be able to traverse that gap. And so here at Housing Joint Venture, we like to say there's not a have and have not, it's the have and have mores. And how can we make sure that we're on the right side of history? And that's really what this conversation is about. And so when we think about history, there are some critical times where society has gone through fundamental shifts. So you can think about the age of enlightenment. You can think about the Industrial Revolution. And then right now we're in the information age. And the information age is where there's been just access to information at a level and speed and quantity that there never has been before. I was thinking about that in preparation for this conversation. And I remember when I was a girl, we used to have these things called floppy disks that you put in computers, and they were actually floppy, right? Like they were legitimately floppy. And of course, before that, you had like actual cards and, we were programming on Fortran and stuff, but I'm not that old. So, you start out with actual floppy disks. And then when I was in high school, our floppy disks weren't floppy at that point. They'd evolved to the 3.5-inch floppy, which was actually quite firm and, like a little rectangle chip. And by the time I got to college, 3.5 floppies were pretty much obsolete, and we had USB drives. And now today, the USB drive of old is now replaced with Box, Google Drive, OneDrive, and all these digital storage programs and software as a service. And so the rapid development of technology and the pace at which we're able to access information, it is absolutely unprecedented. We have these cell phones that are now literal supercomputers, legitimate supercomputers in our hands, and we have access to anything we want to know at all times of the day or night. And that is absolutely, absolutely incredible, because that is something that no one else has had access to. When I was a girl, like very young, if I had a question about something, I need to go to an encyclopedia to answer the question. And, there was no such thing as having this myriad of different voices and opinions that you have on a topic. Versus today, if I'm researching something, I'll look it up and I'll open 5 or 10 articles, just to really crowdsource, so to speak, a variety of different angles on that one topic. And so the information age has really done a lot for us and for the average individual. And that's a lot of good, right? So it's increased our connection person to person. So we really have a lot more connectivity than we've ever had before. Langston mentioned that we went to graduate school together, and we were, interacting with some other folks in the chat who also went to Texas. Many years ago, after you've left school, you don't necessarily have a way to keep in contact with the person if they don't live in your local environment, your local area. So it's very common that once you graduate school, you lose touch and you either never see that person again, or you wait for that 10 or 20-year reunion. Versus today, we have social medias, we have all the ways where we can keep in contact at the level and frequency, again, that is absolutely unprecedented. And that is absolutely amazing. Because with that connection, comes additional economic opportunity. So I think we've all heard of people that start a business from their cell phone on social media. They become, Instagram famous and so forth and so on. And again, that is wonderful. And the last point I want to make here is that it's not just that we have access to information. We have access to information that was previously hidden or siloed. So it was only if you were in, let's call it the good old boys club, or some tight-knit network, that you had access to information. You could learn how to, let's say, invest or whatever specialized topic it is that you're interested in. And the information age has really brought visibility to that opportunity, which again is absolutely fantastic. And that's what the internet has brought us. But the internet hasn't done everything. And one thing that, in reflecting on why these things are so important right now, is visibility is fantastic. Access to information, unprecedented. But what it did not deliver was ownership and mobility. And that truly is the name of the game when it comes to building wealth and personal sovereignty, okay? So when you think about it, you have access to all these platforms, you can participate in these platforms, you can gain information from these platforms, but you don't share in any of the actual ownership or the true utility of that platform. So for example, we can all get on Facebook and, we can post and drive content and drive traffic, but ultimately we're on borrowed ground. We are renting our spaces there, right? And so what you have is these institutions and these ecosystems that have restrictive ownership and restrictive mobility. Now, you end up with ecosystems that thrive on user participation, but the contributors themselves, they don't share in any of that upside potential or that benefit. And we're also still living in an age where your country of origin or where you came from, that really dictates how far you're able to move, where you're able to go, and how much difficulty you have in going from jurisdiction to jurisdiction. And that's not okay, right? So there's so much hindrance when you're trying to go and just do normal transactions that it's like, I wonder if there's a better way. Like, is this really the best way to do things? Or is there some other way that we can reimagine how life happens, so that individual person has greater access, greater upward mobility, so forth and so on. And if you've been paying attention, again, over the past year or so, you may have heard topics like cryptocurrency, things like Web3, the future of the internet, NFTs, all these different buzzwords. And essentially, the reason why those things are so important is because they're talking about something called decentralized communities. You may have heard decentralized autonomous organizations. And basically, it's breaking away from these traditional barriers and these traditional lines of demarcation that really cause hindrances, okay? And so right now we are at a microcosm, and that the information age is leaving just what it was. And again, there are lots of benefits of, let's call it the today internet. And now we're transgressing to a new version of this age, and that's Web3. And Web3 brings so much even more opportunity on top of here. Primarily, it gives open transparency. So not just access, but now everyone can see in a transparent manner who the participants are, what they're doing, and how they're interacting. So now you're getting the details. That's a good thing. You're also getting public validation. So that means it is more secure. If you've ever tried to purchase property or do a transaction overseas, corruption, and not that the United States is free of corruption necessarily, but corruption is always one of the things in the back of your mind of, am I actually going to get my money's worth or what I thought I was paying for? And that public validation that gives, as long as it's recorded on the blockchain, that gives validation that this transaction occurred in this manner between these two parties, which is wonderful. So that security, again, is a unique advantage that we didn't get in Web 2 or the current internet today. It's also peer-to-peer, right? So that means that there is no intermediary that is hindering a transaction from one party to another. I'll give you a very quick anecdote. It is now 2021, and we are in the real estate space. And typically when you are purchasing property, you have to purchase it with what's known as certified funds. So certified funds means you can't put it on a credit card. You have to have the real money to do it, unless you're getting a bank loan or something. So I needed to send a wire. Super normal transaction, right? you send a wire. So I went, and this was the first time I had to send a wire from this bank account from a variety of reasons, just money was in the wrong place. So I tried to look online and tried to send a wire, and I couldn't find the right buttons. So I decided to call the bank and say, hey, I'd like to send a wire. May you assist me? And they informed me that I had to go into the branch to send a wire. Again, it is 2022. No problem. Time was of the essence. I really need to get this done. So I traipsed on down to the bank in the branch. I don't think I've done an in-branch transaction in a decade. And so I go into the bank and I need to send a wire. So I have to wait for the personal banker. The entire transaction takes over an hour and a half to send this wire transaction. Not only did it take a lot of time, here's the rub. It cost me $90 per wire. So I'm already a customer. I already have deposits here. And now you're charging me $90 to send money that I already have from one location to the other location, which is exorbitant. To put it in context, normal wire transaction fee should be $5, $10 maximum. So this was already quite exorbitant from a fee standpoint. So, me being the engineer self, I would like to make sure this doesn't happen again. So I requested that I can have access to send wires over the phone. They said, no problem. In order to do that, you need to fill out a paper form, fax it in, and in 12 to 14 days, we will give you access. Oh, and by the way, it will be 3 times as much as a monthly fee for the privilege and the ability to send wires over the phone. This is incredibly backwards. So we are now in COVID times. In order for me to just do normal transactions, I have to pay fees. I have to go through these archaic processes just to do something that should be very, very simple and easy to accomplish. It was utterly ridiculous. So after all this and being very just flabbergasted that they had the audacity to have all these archaic rules, I was like, no problem. Thank you so much for your time. I really appreciate you allowing me to get my transactions completed. And the banker asked if there was anything else that I needed. And I said, no problem. I'd just like to, can you direct me to the facilities? I'd like to use the restroom before I leave. Can you imagine what they said? Ma'am, I'm sorry. Our restrooms are not open to the public. Excuse me? So here I am, a high value customer. I've just spent over $300 in transaction fees. I am a high frequency user, and I've spent an hour and a half in branch because of your policies. And then now I'm being treated like a second-rate citizen, like a bum off the street, as opposed to a high-value customer. That is the problem with intermediaries and people that have these perceived levels of power that they can thrust upon the individual. That is the problem. And of course, we can exacerbate this. And this is just one small example among many. And of course, there are even worse examples of this sort of thing. But think about how all these different intermediaries are interacting and preventing your ability and your mobility to go from location to location, digitally or otherwise. And every step of the way, that's hindering your ability to build wealth, to make your own decision making, and really create the future that you should have and deserve. Okay. The other thing about Web3 is that it is shared ownership. So there is no central governing body. Nobody owns it. It is everybody's playing field. And therein lies even more opportunity because birds of a feather flock together. So in these new decentralized communities, citizens are able to self-select and basically come together because people of similar thought modalities tend to attract one another, which is awesome. So again, let's just kind of bring this all back and say, why is this important? Well, the reason why this is important is because when we're trying to figure out where we're going to go next, we have to say, how am I going to progress? And again, how am I going to build my own personal wealth? And the truth is, again, these central authorities and intermediaries, they thrive and profit from these lines of demarcation. So if we can break free of that, then we can determine ways that are best for us to build wealth. And again, use whatever asset classes we deem necessary in order to accelerate that. And in our case, that will be real estate. Okay. And so the thing about it is, I mentioned very briefly, right now, we're all subject to these central authorities telling us where we can go and where we can't go. And in the Web3 environment, we basically are able to break free from what Warren Buffett likes to call the ovarian lottery, which says that every person is subject to, it just so happens to who you were born to and what sort of access they can give you. That's the lottery that we all take. And some people win the ovarian lottery and other people don't. And depending on where you end up, you either have mobility and access or you do not. And that's not how it should be. Every person should be on the same and equal playing field. And that's exactly what we want to deliver here. Okay. So what is the economic rights movement? So basically, ERM is a vision that reimagines this social ecosystem and is a culmination of ideas, people, and businesses together in order to start to solve large problems at scale. Okay. And so basically it's rooted in the concept of rapid prototyping and iterative collective policy making and development. So ERM is a larger ethos under which we implement ideas and investment theses so that we can bring together these concepts in the real world so that everyone can benefit, okay? But we're not naive, and we recognize that while there's all this opportunity in Web3, there's also very real needs here on the ground in, let's call it the real world. And so one of the first initiatives and primary initiatives of the economic rights movement is neighborhoods of the future. And why is that? Because we know, housing is one of Maslow's fundamental hierarchy of needs. And we believe that housing is really the start of someone's pride and their ability. It's where you get your pride, your dignity, it's a source of respect. And it's showing that, hey, I deserve a clean, quality place to live. And unfortunately, most people don't have access to that, or they can't participate in investing on a larger scale just because they have been priced out of the market. I was speaking with a young lady yesterday, and she and I were talking because she's a real estate investor herself, and she started investing quite young. I think she was 24, 25 when she purchased her first property. And she was kind of lamenting the fact that people today are hesitant to make that first purchase. And, I had to say, I actually resonate with people today that struggle because my first place was $85,000. The problem is that $85,000 starter home does not exist today. And we'll be talking a little bit for some of the reasons why, but as housing prices and, the cost of construction, the cost of land, and all these different components has increased, that $100,000 starter home no longer exists. It's now a $300,000 or above just to get in the game and get that entry-level property. So that understandably makes people more hesitant to get in and actually participate in the game. Even more so when we talk about housing at scale and providing housing for other people beyond just your own personal family and your own individual housing needs, okay? So basically, real estate as an industry has participated in the internet and information age to some degree. There's certainly there's no shortage of information out there, but there is certainly a lack of participation, and especially around persons of color, marginalized communities, and places that have had systemic underinvestment. And so if we can combine the concepts of Web3 and really those decentralized communities to some very concrete real world needs like housing, then we're able to really accelerate wealth building for the individual in a collective manner that really has never been done before. And that, ladies and gentlemen, that is the economic rights movement, okay? And so again, neighborhoods of the future is our primary objective going forward. And the primary need is to address this need for budget-friendly housing. And I'm talking about this from both a rental standpoint as well as a home ownership standpoint, because they're both just two sides of the same coin, to be honest with you. And ultimately, it's out of reach for many. But I think one thing that people don't realize I get a lot of questions asking, well, what's going on? And, housing prices is going to come down anytime soon. Like, I just want to wait this out. It's not happening. And here's why. The problem that is causing home prices to increase is not another bubble. It has nothing to do with banks playing funny business. Instead, this is a systemic deficit that is 50 years in the making, okay? And basically this deficit started in the 1970s. It's just been exacerbated over time, layering it on with our demographic realities of being in the States. So here's what I mean. In the 1990s, this problem was already starting to show its head. Then we had the 2008 recession that caused a lot of people to need to abandon their homes for financial reasons. And so that made a housing deficit that was bad. It made it worse. And then in 2020, of course, we had the COVID-19 pandemic that is still going on. And that just made a problem that was already bad now mission critical. And now it is top of mind for everyone, whether you're in that real estate business or not. So here's what I'm talking about. So starting in the 1970s, home building as an industry started taking a decline in the number of new homes that were built and entering the market every year. So every year you have homes that are already built. You have a certain number of homes that need to be, they're maybe dilapidated or something like that. So those are homes that are taken off the market. And then you also have new household formation. So people that are leaving their parents' home and starting a new home, starting a new household. So you have new demand every year. You have some houses being taken off the market every year, and you have your existing housing stock. So even in a flat market, you need new homes just to address the new household formation and replace any homes that have been torn down, for lack of a better term, over that past year. Okay. Well, starting in the 1970s, again, the number of homes being built has been on the decline. In addition to that, what we would call that starter home, that budget-friendly, I'm going to call it $100,000 home or so, that has also been on the decline. So by 1982, only 40% of new homes being built were starter homes. By 2019, 7%. So we went from 40 to 7% of new homes being built that will be classified as starter homes. By the year 2020, right? So from 2019 to 2020, we went from 7% to being so low that we have to put it in real numbers. Only 65,000 new homes that qualified as starter homes were built in 2020. That's how big the problem is. So what that means is at the same time that we're building less homes, the housing deficit, the number of homes that we need in order to be at parity, that is also increasing year over year. So in 2018, we were, as the United States, had a deficit of 2.5 million houses. And by the end of 2020, that deficit had risen to 3.8 million homes. So ultimately, we as a country need more entry-level residential housing units in order to address this shortage. And this isn't something that's going to work itself through the system, in a year or two. Literally, with exacerbated home building, it's still going to take 5 years or more just for us to reach parity. So I don't see any relief in that upward pressure that we're seeing in home prices anytime soon, right? And again, what's causing this shortage? Honestly, demographics are your destiny. So the thing about it is, we have baby boomers, which are the largest population, and the second largest population are millennials. And millennials are now in the 35 to 40-year-old range where they are really in their prime home buying years, as well as you have other generations that, again, are doing new household formation. And that doesn't matter if you're renting or buying, that is just leaving a shared environment, going to starting a new, housing unit. And so with an increase of new household formation, plus our demographics of, you had this huge population of baby boomers that thankfully are living longer, but that means that we're not getting that household turnover, someone that is retiring or passing away, selling the home, and now it's available for new residents. We're not experiencing that turnover. So now it just makes the whole system that much more constrained. All right. So what do we do, right? So I've given you the doom and gloom situation. So what does that mean that we do?
So Richelle, before you go there, I want to point out some of the questions in the chat because I know you can't see them.
Oh, please do.
So our good friend Joyce, Dr. Olushola.
Hello, thanks for calling me, Joyce.
Asked the question, how do you explain the increase in senior living homes?
You have more seniors that are living, so therefore you need more housing for them. It's just a lot of this comes back to demographics. Demographics are your destiny. So over the past couple of years, you've definitely seen an increase in number of assisted living facilities, nursing facilities, elder care housing. Obviously, that means that cemeteries and that sort of industry is also of the boom. Interesting fun fact, most funeral homes and cemeteries are now publicly traded companies, even before the pandemic, because they were in anticipation of the baby boomer, the silver tsunami is what they call it. So in anticipation of that silver tsunami, they have already put themselves in place in order to address that large need. So it is a fully monetized business model that is publicly traded.
I don't know how I feel about that. the fact that they call it the silver tsunami, one, silver meaning like they've gone gray, right?
Correct.
And they're
And a
going to
tsunami
die,
means
but
a
they're
lot
also
of,
calling it the silver tsunami because they're gonna like
there's a
make
lot of them.
purchase off the fact that they're gonna die. Like,
There's a lot of them, so there's a tsunami of them coming.
yes.
Yes, demographics are tell the story. Sorry. Any other questions, Langston, before I head on?
No, there's none in the chat.
Okay, awesome. So yeah, demographics really, they what is it? You have the music and the chord. So demographics can really give you a sentiment of where we're going and why. So let's talk about some of the things that we can do, right? So one of the main solution that we're planning to implement when it comes to addressing this housing shortage and leveraging some of the new benefits of Web3 is we've identified locations that we are calling ERM zones. These are target locations that are primed for growth potential as well as economic development. So when you think about real estate investing as an industry, typically investors fight amongst themselves, trying to get the best deal in a very constrained location. And again, that drives housing prices up. Why? Because wherever there is where the most expensive places are also the most desirable to live and have the most opportunities, better jobs, so forth and so on. So there's not a shortage of land. We can all move to Kentucky, okay? But no one wants to live in Kentucky. Sorry if you live in Kentucky. No one wants to live in Kentucky, right? People want to live in San Francisco and the Houstons and the New Yorks of the world because that is where all the mobility and vibrancy is. But even still, there's a lot of locations that have excellent growth potential that have just experienced systemic underinvestment. So instead of fighting it out with existing or other investors for just small opportunities that honestly, all it does is drive down returns and really make it more difficult to earn a valuable investments. Instead, we focus in tier 2 and tier 3 cities that have growth potential where there is little to no investor activity, as well as systemic underinvestment, because that allows you to have acquisition prices that are much more attractive, even lower than their as-built cost or intrinsic value. What I mean by that is, and a lot of times you can buy the property for less than the sum of the parts. So I can buy this property that's already standing for less than it would cost me to buy new roofing shingles, 2x4s, paint, drywall, and concrete, right? So because it's already built, it's less expensive. I don't have to put that labor in it. And so if you can purchase it at that lower cost, then that lowers your basis and allows you to deliver outsized returns to all participants and investors. And that's essentially the business model there. Now, I should mention that at Housing Joint Venture, we've been doing this model in practice for over the past decade and really have ironed out a lot of the kinks. So we focus in the mega Midwest because there is so much opportunity here in a variety of different investment modalities that I'll speak about on the next slide. And so at this point, this is no longer a thesis. This is actually what happens in real life and something that we've tried and tested in 4 cities to date. So not only did I start investing in Austin, but Housing Joint Venture's footprint is in Columbus, Ohio, Dayton, Ohio, Toledo, as well as Detroit, Michigan. And so in these neighborhoods and in these subsections in these cities, there is certainly a lot of opportunity and a lot of need, both from an investment standpoint, as well as from the housing individual owner occupant standpoint as well. And the focus there is on serving the millennial audience, because again, when it comes to new household formation, millennials are forming new households at a greater clip than any other demographic audience. So with that, you might be thinking, oh, this sounds good. And she's spitting some facts and data at me, but why do I have to do this now? And why is this important? Well, the thing that why now is important and why now is different is because of something known as inflation. I like to describe inflation as an eroding away of your buying power. So again, I'll use this example. When I was in high school and I first started to drive, I would ask my parents for $20 every week for gas. And the reason why I did that is because that was enough to fill my tank. So if I was on empty, I could go from E to F for a $20 bill. Inflation, however, is an eroding away of your buying power. So what that means is if I had the same vehicle and the same $20 bill, and I went to the same gas pump, I wouldn't necessarily be able to go from E to F with that same $20 bill. I may be able to get 3/4 or maybe a half a tank. So I'm spending the same dollar at the same institution to do the same thing, but what I'm getting in return is effectively reduced. My buying power has been eroded away. And that, ladies and gentlemen, is what inflation is. And inflation is here. And it is a part of the housing, it is a part of the broader economic cycle. Now, one thing that you should note is that the Federal Reserve has a goal of keeping inflation at less than 2%. If you've been to the grocery store lately, you can see that that's not exactly happening. And the reason why that's not happening is because housing is a key component of the business cycle. So as long as housing is, accelerating and really getting this upward pricing pressure, inflation is going to be prevalent in our market. So definitely something to keep in mind there. And so the reason why owning real estate is so advantageous is because it is an inflation hedge. So the beautiful part about real estate from an income producing standpoint is that any income that you get from owning from real estate, residential or otherwise, it pegs with inflation. So rents increase as inflation goes up. The value of your home increases as inflation goes up, so forth and so on. So it is an inflation adjusted asset versus other asset classes. If you have a normal business, it may be more difficult for you to charge more for your services versus real estate is inherently an inflation hedge. So that's why it's so beautiful and a really great investment for times like these. Okay. So how we're going to do this in practice? Well, we like to implement a three-legged approach. So that includes residential redevelopment, which is what I spoke on earlier, which is where you're purchasing existing properties that are either in blight or some slight disrepair and redeveloping, so they're already existing properties. The second modality is infill lots. So here in the Midwest, in Ohio, Michigan, and similar states, following the 2008 recession, there was so much blight and so much abandonment that a lot of local municipalities and counties started demolition of abandoned properties. So what that means is in a neighborhood, you will have vacant lots available within an existing housing development. And those lots are now available for people to build new properties on those existing lots. So it provides a lot of cost efficient advantages because it is already zoned as appropriate and things like that. And then finally, the last approach is using greenfield acreage. And this is what you think of when you think about someone building a brand new subdivision where you get a large swath of land, 5, 10, 50 acres, and you parcel them out into individual lots, build homes on them and sell them off as individuals. So those are the three legs that we are implementing as a part of this ongoing fund and effort with the economic rights movement via housing joint venture. So hopefully some of all this sounds good to you, sounds interesting. Just to bring it all together and wrap it up here. And of course, again, if you have any questions at all, happy to chat and answer those in the Q&A. But now we're really at a precipice of, we have a lot of opportunity coming from Web3 and these decentralized economies, as well as a very real need in the real world for housing affordability. And the marrying of the two allows for persons that traditionally don't have access to this type of investment or investment opportunities of this caliber, we can leverage Web3 to deliver these investment opportunities via tokenizing assets, so forth and so on. So I'll be sharing more details of that to come if you're interested in learning more. And then also, fundamentally, housing is something that everyone needs, no matter what walk of life you are in. And so if we can actually deliver what the market needs, which is new budget-friendly housing to the market, there is an opportunity to really reap outsized returns for really taking advantage of this opportunity that has been over 50 years in the making. And it really is a culmination of unprecedented events. So with that, there are lots of ways that we can go from here, and a few ways in which we can continue the conversation and working with Housing Joint Venture. The first is to go to ERM.network. If you go there, you can sign up for the newsletter and join a Discord community. We share lots of complimentary resources. And really, if you are interested in increasing your education in this area and want to be one of the first to be notified when the fund launches, so when you're able to start investing and participate in these funds, in the fundraising and of course profiting and so forth and so on, then go ahead and go to erm.network and join in the Discord group. We'd love to have you. And there are so many resources. It's a good time. So lots of fun there and lots of things to learn. If you're interested in learning a little bit more about actually how we do what we do from a pragmatic standpoint, we do offer investor education, and you can visit that at theinvestingbootcamp.com. And then if you just want to keep in touch in general, our main website is housingjv, as in housingjointventure.com. And that is where we share articles, news clips, press releases, and also that newsletter is our general newsletter that encompasses everything that we've chatted about today. So with that, thank you so much for listening. I hope this was interesting and informative, and happy to see where the conversation goes from here.
All right, everybody. So at this point, we're going to take questions from the audience. But typically how I do this is you can write them in the chat, or using the Q&A function, you can type them in the Q&A function, or if you want to raise your hand, you actually want to verbalize your question and ask it out loud, you can do that. But I just ask that you raise your hand first, and then I will go over and I'll ask you to unmute, and you'll be able to unmute yourself. And then you should be able to ask your question. So as this goes, right? So your question, as you raise your hand, someone else may be getting their question answered, but I may ask you to unmute while Richelle is still answering the question. Just be tactful and don't jump in and ask your question as she's answering somebody else's question. So typically what I do is I start off and I ask the first question to give you all some time to maybe think about some questions. And if not, Richelle and I will continue to dialogue and go back and forth. And so I see Lydia Carter. Actually, Lydia just wrote a question in the chat, and we'll get to it after my question. But I just want to add, Richelle is actually in Columbus, Ohio. So she would be a great resource for you. I met Lydia as I was teaching at an elementary school in Columbus. So she's a dear friend of mine.
Fabulous.
Yeah. So Richelle, my question is can you talk a little bit more about like what Web3 is? Mm-hmm. Is Web3 Discord? Because some people don't know what Discord is. Is absolutely. Web3 the metaverse? Can you give a little bit more insights into that?
Yeah. So basically, Web3 is an all-encompassing term that talks about the future of the internet. So yes, it includes the metaverse, which is a virtual reality where, again, as I mentioned, it is peer-to-peer. It has increased transparency, and it is what is known as the blockchain. So basically, Langston and I'm going to buy Langston's car. Langston's going to sell me his car. Okay. I saw Langston on Craigslist. He has, I don't know, a 1998, whatever, and I like it, so I'm going to buy it. Okay. So as Langston and I do this transaction, the only person that knows that I'm buying Langston's car are Langston and I, right? I can go and buy it with cash. I can do the transaction. I can pay with cash. I can pay him with a card. I can, get a loan from my dad, whatever, doesn't matter. But it's just Langston and I, the only persons that know that. Now, I buy the car from Langston. He signs the title. I never file the title. I get into an accident. Whose name is still on the car? Langston's. How does Langston prove that he doesn't own the car anymore? He can't. I sold it to this lady on Craigslist. Well, sorry, bro, you're liable, right? That is an example of some of the things of the exposures that we have in today's world. Using the metaverse, i.e., a virtual world where all transactions are recorded on a centralized ledger, which is called the blockchain. So a centralized ledger is essentially, if I'm in accounting, I take accounting of all my expenses and all of my income. But again, I am the only person that sees that ledger. A centralized ledger is a public one, so everyone can see what I spent. Everyone can know that I ordered Grubhub 4 times this week because I don't feel like cooking, right? That's what the centralized ledger is. So if we did this same transaction where I bought his 1998 whatever, and we purchased it on a blockchain, then it is public that I purchased, person A purchased insert asset here from person B for this amount at this time, date, location, and all the details. So even if I don't do all of the mechanics that I should on my end, Langston is still protected because it is publicly visible and publicly recorded that this transaction occurred. That is the beautiful part of participating in the metaverse. And the way that people talk about it is, so Web 2 versus Web 3 is just a way to wrap your head around what's going on, and that, you know, when you upgrade something, you get the 2.0. So like I have an iPhone X, so I'm a little bit late, but the iPhone 14 is coming out this year in 2022, right? So every incremental number lets me know that there's progress. So Web 1 would be just us on Craigslist off chain. Web 2, which is the internet as we know it today, and then Web 3 is just a part, somewhat jargon, but it's a way to delineate between today's internet and tomorrow's internet. And tomorrow's internet is based on additional transparency, that blockchain, and using currency that is not tied to one governing body, i.e. the United States issues the dollar, the Japanese issue the yen, so forth and so on. So I am no longer bound by anybody's jurisdiction, by anybody's rules. I do what I want because I want to do it. And you can't stop me. And that when you are, I'm going to say perpetually the underdog, you kind of need to take advantages of situations and new opportunities like this. And so that's why this is such an unprecedented opportunity. So hopefully that helps.
So what I'm going to say to you is my interpretation of what you said, and you let me know if it's correct.
Okay.
So essentially what you're proposing as the economic rights movement is a way of leveraging blockchain technology, cryptocurrency, to invest in real estate, in real real estate, not necessarily metaverse real estate. And so go ahead.
The way the fund will be structured is that we will have our, so when you have a fund, you raise money. Some of that money is deployed, some of that money is held in reserves. So the reserves will be held in crypto. We will be purchasing some digital real estate because some of those returns are impeccable. And you do need, we think that it's important to have exposure to that and really create that new jurisdiction. But of course, the ultimate need is in real world real estate that we've talked about already.
Great. So I think the main takeaway here is that Web3 isn't necessarily just the metaverse. It is the all-encompassing term for the way in which the internet is going to be evolving moving forward. So,
right. It's a whole change of your mindset. So this isn't just about, buying a random little rental house and renting it out. The game is so rigged that we need something that is fundamentally a fundamental shift. And that's exactly what this is.
Thank you. So I'm gonna go to Ms. Carter's question. And so hers was very much about the fund. So she's asking, is she able to invest in the company or the fund in the way that someone would invest in a mutual fund?
Yes, that's a good way to think about it, Lydia. Exactly. So depending on so we're still in the real world and we're still governed by the Securities and Exchange Commission, and real estate is a security. So depending on your personal aptitude, if you're an accredited investor, then you can invest directly in the fund. If you're not an accredited investor, then you would need to invest via Web3 and the blockchain, because again, that has access to everyone, not just accredited investors. So the way it works today in the real world is only people that have $1 million of net worth or an income for themselves as an individual of $200,000, if they're married, $300,000 per year. Those are the people that are traditionally allowed to invest in real estate funds, or in like a private REIT or a fundraise. So that's why most people can't invest as a group, because you're disqualified fundamentally. Okay. Now now you can raise smaller funds, but that's really just on an individual property, not at scale like what we're talking about here. So we're talking about large swaths of land, tens of hundreds of units at a time. So at that scale, you are subject to the SEC regulations. So the way that we've structured our fund is that a portion is reserved for persons that are accredited. So those persons are going to have a minimum investment amount. Today, that's $25,000. So that will be the minimum amount that you can invest in order to participate at that level. If you are not an accredited investor, then you would need to participate via a separate regulation that isn't necessary here. But yes, you can still participate, but it will be facilitated via the blockchain. So again, you still get that transparency and you're able to have lower investment amounts. And we're thinking that investment amount will be somewhere in the $1,000 to $1,500 range, of course, depending on how currencies fluctuate, things like that. So hopefully that's helpful. But broadly speaking, yes, you would invest similar to a mutual fund. And just like a mutual fund, you can either invest directly with your own personal funds or via retirement accounts. So, and happy to take this conversation offline as necessary. And that's something we certainly help our investors do and navigate. So no problems there.
So Megan asks, and I'm gonna massage the question a little bit. She's basically asking, if the housing market isn't gonna go down anytime soon, like what are the best alternatives to look to for investing in real estate right now, right? Mm-hmm. As opposed to prepare for when the housing market will go down, if it ever does.
Right. So this is one of those things where some things will become so expensive that what I'm about to say is going to be controversial. So let me preface it with that. The American dream and the concept that individuals can own a home will no longer be our norm. So the fact that people are becoming more accustomed to renting and fractionalized, and wherever we can allow for fractionalized ownership, that will become much more the norm. So think of much more of a timeshare or rental model as opposed to, I own my own home outright, free and clear. That is where we're going as a society. So I'll put that there. Next step, what can you do in the meantime? Real estate is just an asset class among others and among many. So learning fundamental investing concepts really is where you begin. So making sure that you understand what the different asset classes are, what your investor persona is. Every investor is going to have different levels of risk and different instruments that will deliver the returns that they seek. So if I'm the thing about real estate is an illiquid asset, meaning I can't just go and trade it for cash whenever I want. I can only sell it for what someone is willing to purchase it for. So if you're just a beginning investor, then maybe doing some stock trading, you can look into options. I personally love, so I think everyone should own lots of things. I love real estate, you should own lots of different things. Real estate is not the only asset class that exists. So let me say that. So I invest in the stock market. I trade options. I own real estate. I own crypto. I do a lot of things. And I think every investor should as part of a healthy portfolio. So the first thing to do is to really gain your financial education. There are lots of great books out there. On Housing JV's website, we have an entire book list of our recommended books to begin with. And so that just really helps shape your mind to think like an investor. And then the type of asset class that is most appropriate for you will start to emerge, and then you can dive deeper down that individual topic. But broadly speaking, I think that options trading, which is it's a stock option trading. So stocks are nothing but fractionalized ownership of a business. So you as an individual are not able to buy all of Apple. You cannot afford it, but you can buy a share of Apple. That is exactly where we're going with housing. People won't be able to buy a house anymore. That doesn't exist, but you may be able to buy a portion of a house or fractionalized ownership, something like that. So that's really where we're going as a society, because again, our purchasing power is decreasing and the cost of the asset is increasing. So you're spending money that has less and less buying power on something that is becoming more and more expensive fundamentally. Am I making sense? So you're trying to pay money for something, but what you're paying with is becoming less and less valuable, and the thing you're trying to buy is becoming more and more valuable. So you're going like this. You're going in opposite directions. That's the problem, and that's why things like Web3 are so necessary.
That's scary. It's scary, to be honest. I'm
here to tell the truth. I mean,
okay, I know it's the truth. It's like when you look at the like Zillow had to like liquidate. I don't know how many homes that they had bought, mm-hmm. And one of the bigger funds, I don't remember the name. I don't get it wrong.
No, you're correct.
Bought up all the homes, right? And they're not going to sell those homes. They're going to make those rental communities like in ways I've never, like I don't imagine. Like when I was growing up, they would build a new subdivision and people would buy the house. Right. Now they're building subdivisions for you to rent the home perpetually.
Right. Built to rent. Correct.
Yeah,
Correct.
Yeah,
Correct.
it's yeah, it's scary. Scary.
Well, so and so that's essentially the choice that we have. We can either sit and be scared, or we can say, what am I going to do about it? So we don't have the luxury of just sitting and waiting anymore. That time has passed.
Yeah.
That's the reality of it. And yes, so I can go on as you know, I can wax poetic about this, but
I want to get to a question in the Q&A. And it's just a clarifying question. So
absolutely
about your fund, or about the underlying idea of the economic rights movement. Is it about buying real tangible properties that can physically be touched, or digital properties in the metaverse? Can you just rehash that again?
Absolutely. So the fund will invest in both. So there will be a portion of the fund that is dedicated to digital real estate, and a portion of the fund that is focused on physical real estate. The primary objective is physical real estate because that is where the ultimate need is, and it's most apparent today. But looking at the larger context, again, we can't play a game where you're aware that there's a barter game being played and you're not participating in it. So from a shareholder perspective, and making sure that we are helping people to actually build wealth in a way that will honor them and actually help them accelerate as quickly as possible. You need physical real estate because that is where the need is, but you also need to participate in this Web3 environment because that is where the future is going. So it will be a bifurcated model. So a portion of it is dedicated to physical real estate. You can touch, you can come to Ohio, you can come to Michigan, we will drive you around, you can touch and kick the buildings. Absolutely, they are real brick buildings. You can see them, touch them, come inside, all the things, just like any other building. In addition to that, a portion will be invested in the metaverse as well. So, and these are all individual questions. And, you know, at the time when the fund is open, we'll have lots of transparency and investor decks and all the details of exactly how the funds will be allocated, so forth and so on. But for now, this is just general awareness. And if you want to have an offline conversation, we can certainly chat more about it and go from there. Well, hopefully that clarifies the question.
I think it did. And if you, first of all of you that have asked questions, we appreciate it. They are welcome if there are any.
Yes, please, absolutely. Thank you so much.
Or to use the raise your hand function. Richelle, I have a question. And it's more like I want to get your thoughts on this idea. So I listened to this guy named Scott Galloway. He's a professor of business at NYU. And he says on his podcast, many times he said this, that the most oppressed group economically is really young people. So he's talking about our generation, millennials and younger, because what happened is 2008, there was the boom, the bust, right? So housing prices went down, but the government did not allow for that to happen again. And so we are not able to take advantage of the crash. So people get upset, they get mad, people lose their homes, it's terrible. But the reason why crashes are built into the system is so that there's a reset, so that young people who are on their way up can buy a house at an affordable price and get in. And so I just want to get your thoughts on, as people who are millennials and Gen Z, and people who have millennial children who may be on the chat, and Gen Z grandchildren, what are your thoughts on the way that we haven't maybe allowed some of these things to self-correct, and the need for this ERM?
This is a big question, Langston. That's a big question.
Take your time.
We are now in the world in the longest bull market. So you're correct. So the markets adjust over time. And I think that's a very healthy way to look at it, that as the markets decline, that is an entry point. So this is going back to Megan's question about trading and investing and things like that. So a market decline is not a negative thing. A market decline is an entry point. Any ladies on the call? I love to go shopping for sales. When my favorite department store is having a sale, I don't say, oh my God, I don't want that dress anymore. I say, oh my God, it is on bargain. I'm going to go get 3 of them in every color. for whatever reason, when it comes to investing, people don't think about it in the same way. When the stock market declines, it's OMG, I'm going to buy every company I've ever wanted in every color, right? Like I'm going to go ahead and load up on shares because that's the time to do so. And that doesn't matter what the asset class is. Right now, crypto is down. Okay. Housing, another asset class. Stocks, another asset class. Gold, another asset class. These are all the same. So I think that's a very healthy way to look at it, that a market decline is an entry point, because it is. Quantitative easing is the term that the Federal Reserve likes to use for what they're doing. Quantitative easing, in layman's terms, is printing money, okay? Like anything else, the more of it that exists, the less valuable it becomes. So remember, we had the conversation about inflation earlier. And I said that inflation means I spend the same nominal amount, but the amount that I receive in value is lower. So I spent $20, and when I was in high school, I could get a full tank of gas. Today, for that same $20, I get 3/4 of a tank of gas. That is because my $20 bill is not as valuable. Why is it not valuable? Because each individual dollar is less valuable. Why is each individual dollar less valuable? Because there's more of them. Everybody got money. There's like a new millionaire minted every week. Why? Because there's so much more money. Everybody can be a millionaire. That's exactly what it means. So that is why it's more difficult for young people. I mean, obviously I am one as well, right? That is why it's more difficult for us to build wealth, because again, you're playing a game that is, I don't want to use like scary terms like fundamentally rigged or something like that. I think that's, I don't want to use scare tactics. But what I'm saying is your dollars are fundamentally becoming less and less powerful. So when you're buying something that is, when the currency that you're using is less valuable, and again, the asset that you're trying to purchase is becoming more valuable, then you're running in place. You're like on that hamster wheel that they talk about. You're running, but you're not actually making any forward momentum. That's why it's more difficult to build wealth. That is the problem. And so that's why credit card debt is bad, quote unquote, because you're buying typically, I don't know what you put on your credit card, but typically what you're buying is something that is a depreciating asset. And now you're buying a depreciating asset, as in something that loses value over time, with money that's less valuable over time. So it's just like, that's a no bueno. So you want to put your money in things that are appreciating assets. So things like real estate or, some other fixed reserve of buying power. So things like cryptocurrencies, gold, precious metals, things like that. Those have been thought to be stores of value. They retain their effective buying power over time. So does that help? And thanks so much for joining, Joyce. Have a great night.
It does. Disclaimer, I don't want y'all coming back suing us. So
no, I'm not a financial advisor. I have a financial license. I am not your financial advisor. Right. So I am not telling anybody what to do. This is just general educational, informational purposes only, and just giving you an education. This is just financial education. This is not, I'm not telling you to do or buy anything. Anything you buy, that is your own decision.
So if there are no more questions, we got one question. The hand went up and then it went down. Oh no. Okay. I think the hand is gone. So if there are no more questions, what I'm going to ask now is, Richelle, if you could just type, I put the Housing JV website.
Yes.
I typed it in there, but if there are other places people can go to find more information, could you type that in the chat?
Absolutely.
What I'm going to do right now is, y'all don't leave. I'm going to talk about some of the next events that we have going on for Entrepreneurial Appetite. We have a few more events this month. I also want to give a shout out to DreamWeek San Antonio. We did this. Normally we have our conversations the last Thursday of the month, but San Antonio has this community curated series of events called DreamWeek to commemorate Martin Luther King Jr. And this coincides with that. So we wanted to make sure that we got Richelle in here to talk about this information as a part of DreamWeek. So I want to give a shout out to them for creating the platform and the marketing and publicizing the event to get some people to come and show up. So if y'all give me 1 second, I'm gonna share my screen just to tell you what's coming up. And if y'all got more questions for Richelle in the chat, she'll type some of those answers in there too
Absolutely.
While we wait and go over this. So. All right, so also want to make you all aware that I am one of the co-hosts, I should say co-instructors of the African Americans in Sport pod class, which is a class that I teach at the University of Texas at San Antonio, but have collaborated with my friend Alvin Logan at the University of Washington. And he's also at Seattle University, and my friend Brandon Crooms at Trinity University to take some of our content and put it online. We talk about the experiences of African Americans in sport. Also want to let you all know that I have a special Patreon that I've set up to help support Entrepreneurial Appetite. It is called the Founding 55. And so for $5 a month, you all will get access to all of these conversations. You'll get access to bonus talks. You'll get access to the podcast early in the videos as well. And the reason why I'm doing this, one, is to help shore up some of the cost of putting on these shows and editing for the podcast. It takes me hours to do the editing, and I would love to hire an intern or someone to freelance some of this work. And as you all know, it is one of my missions for this business to support Black businesses. And so we will be looking for, someone in the Black community to do this work to keep our money circulating in our community. So if you want to check that out, you can use the QR code there. I will also be sending an email out following up with you all about upcoming shows and whatnot that we have going on. Also want to make you all aware that next week, we'll be having a conversation with Anthea Butler, the author of White Evangelical Racism, The Politics of Morality in America. This was an originally scheduled event for, I think, December or November, but she couldn't show up. We still had a great conversation about the topic, but this time she'll be there, and I think she'll have some really good insights. If you have not gotten this book, you should get it. It's a small book, so you will be able to read it before next week if you get it in time. If not, you can still join us even if you haven't read the book. Also, the last Thursday of the month, I am going to Denver, Colorado to be part of the Outdoor Retailers Association annual trade show. And I'm going to be doing a special conversation with Black people who work in the outdoor industry. You all may not know this, but there's a group of Black folk who are training to summit, to climb Mount Everest. And this is the first time that an African-American, not a Black person, but an African-American is leading an expedition of all Black people to the top of Mount Everest. This is a pure fundraiser. So all the registrations for this event will go to support Full Circle Everest in their journey up to scale Mount Everest. So that's the conversation that I'm most looking forward to. The talk for Entrepreneurial Appetite will be part of a follow-up conversation. So if you ever watch Bill Maher, they have overtime. So we're going to be having a special overtime conversation from our Airbnb with Philip Henderson, who is leading that expedition, and some other entrepreneurs who work in the outdoor space. A brother named Alex Bailey, who started an organization called Black Outside and Camp Founder Girls. If you're not aware, there's a Black version of the Girl Scouts that was started in San Antonio, Texas by a Black woman. So he's got some dope conversations. The brother who founded HBCU Outdoors may show up. So I invite all of you all to be a part of that conversation as well. And then, of course, we got Black History Month. We're going to do something every week, the month of February, for Black History Month, starting off with Love for Liberation, because we know that February is the month of love. And so this first book talks about Black people in the diaspora working together to change policies to liberate ourselves in the Caribbean, the United States, and on the continent. Then we have a book called Unshakable Faith that talks about Black people in the church doing for themselves, building their own institutions. Then a book about Black women in love talks about Black women in marriage and the desires of many Black women to be married. And lastly, we have Strategic Planning for Black Folk, which is written by one of my mentors, Dr. Dorian Williams. So I invite you all to sign up via the Patreon. That is the best way to get access to all of these events. And it is continuous perpetual. It's only $5 a month, and you'll get access to our conversations moving forward. So I want to thank Richelle for joining us. I want to thank you all for joining us here this evening. You all stay safe, stay warm if you're in a place that's cold like Columbus, Ohio, with Richelle, and feel free to reach out to her in the economic rights movement and housing joint venture. Thank you.
Thank you so much, everyone.